Today's video is sponsored by Fast Capital 360, a leading business financing marketplace. They offer different types of business financing, from business term loans, short-term loans, SBAs, MCAs, equipment financing, as well as business lines of credit. There's a lot of information out on business credit, but what data points do you really need in terms of your business revenue as well as your personal credit score to qualify for business credit cards, fintech lines of credit, SBA loans, equipment financing? Now, there's more data points that go into a lending decision besides just revenue and personal FICO score, but this is just generally speaking. Now, the way this is broken out, you have your FICO credit score, and there's three categories. You have subprime, fair credit, and then near prime. So subprime, in my opinion, is going to be 620 or less. Then you have fair credit, 620 to 679, and then you have near prime. So near prime is going to be around the 680 mark. So anything higher than that, I've just grouped into the near prime category. Low revenue means, no revenue up to 2,500, between 2,500 and 10,000, and then greater than 10,000. And this matrix shows what types of credit products, from fintech credit cards, SBA loans, equipment loans, bank loans, and these are commercial bank loans from commercial banks and credit unions, business credit cards. So these are going to be the American Express, Chase. Then you have fintech business lines of credit. Now we're talking about the Blue Vines, the Fund Box, the On Deck. Now, for the purposes of this video, I wanted to cover some basic business credit products. So we're going to be covering fintech business cards, regular business credit cards from the commercial banks, equipment financing, SBA loans, commercial loans, which includes commercial business lines of credit, as well as fintech business lines of credit. So just to clarify, when it comes to fintech business cards and commercial credit cards, so one of the main differentiators is that fintech business cards are going to be income or revenue driven, whereas American Express business cards are going to be credit score driven. So which products you qualify are going to vary based upon your data points. You don't need to let your credit score or time in business hold you back. With Fast Capital 360, get funded with as little as 4 months in business and a credit score of 500. A merchant cash advance is a loan alternative that offers borrowers a lump sum of capital based on their business's future sales. MCAs are short-term and repaid through smaller daily or weekly payments until the total cash advance and lender fees are paid in full. So what are some of the reasons to use a merchant cash advance? Number one, this is going to be for short-term expenses. So if you have minimal business history, also if you have bad credit, because MCAs have a very low criteria when it comes to your credit score. Now, Fast Capital 360 is a marketplace that has a lot of different financing solutions. So I just wanted to show you guys examples of fintech business lines of credit that are revenue driven. So Fundbox is one example where they're looking at your business revenue, and that's the main data point that's being focused. You also have Headway Capital line of credit. Cabbage is another fintech line of credit that's focused on your revenue. So even though they're checking your credit as well, the credit score requirements are going to be minimal, and the main driver is going to be demonstration of business revenue. Now, one of the great things about business lines of credit, whether that's a fintech business line of credit or a commercial business line of credit, is that it's revolving in nature. So meaning you can withdraw funds, spend those funds for business purposes, and when you repay, those funds become available again. Business lines of credit are best for short-term needs and unexpected expenses. So some of the pros includes flexible use of funds. The funds can renew as you pay down the debt. No interest charged until you draw on the funds, and no restrictions on how funds are used. Now, one of the biggest limitations, I would say, business lines of credit versus term loans is that the limits are usually going to be lower. Installment loans usually have a more competitive interest rate. Now, when evaluating borrowers for a line of credit, lenders will review recent bank statements to understand your business cash flow, existing expenses, debt obligations, and income. To qualify for an online business line of credit, you must meet certain requirements regarding time in operation, annual revenue, and personal credit. For example, newer businesses or those with less than stellar credit most likely will qualify for short-term business lines of credit with lower approval amounts and less competitive interest rates. Businesses with high revenues, established business histories, and good credit are likely to be eligible for long-term lines of credit with higher lines of credit and lower interest rates. So first, when we're starting at this lower level right here, and this is going to be for pretty much startups, you haven't really started generating that much revenue, so $2,500 or less per month. But as you can see, the recurring types of products that are going to be eligible at this level are going to be fintech cards as well as equipment loans. So you can see that is in all of these different categories. Now, the reason why equipment loans are going to be eligible if you don't have that much revenue, as well as if your credit score isn't as high. It's because equipment loans are secured, right? The equipment is securing the loan. So if you default on the loan, they would just take the equipment. So secured loans are usually going to be the easiest to qualify. So that's why you see equipment loans in all 9 buckets. Then you have the Fintech credit card. So I'm talking about a Divvy, Torpago, Capital on Tap. So the Fintech credit cards typically are going to be revenue based. And sometimes you can get starter accounts like the Divvy Credit Builder, or even like a Clear Card where you don't really need to have that much revenue in order to qualify for it. Or even like a Corpay, you don't need to necessarily have the revenue in order to be able to get it. And most fintechs, they're not going to be heavily credit score driven. So you can have a lower credit score and still qualify. And then right over here, you have the fair credit, but very low income business. And again, it's going to be the same options, but in certain cases, you might be able to qualify if you PG for a commercial credit card, but you're likely going to have to be closer to like the 680 range versus the 620 range. So like with American Express, you're not going to get a business credit card with a 620, but you might be able to get it with a 670. But generally speaking, you're going to need to be over that 680 to qualify for the majority. So for that reason, you don't see business credit card in this bucket. And then here, this is going to be for the startups. They don't have that much revenue, but they have good personal credit. So that's going to allow you to be eligible for business credit cards. All right. So now when we're looking at this medium revenue, right, and across the different credit buckets, one thing that opens up are these fintech business lines of credit. So I'm talking about the Blue Vines, the Fundbox, these fintech business lines of credit where they're revenue based for the most part. They're not really going to be looking at your credit. And even if they do, most of them can go as low as like a 600 credit score. Even if you don't have the highest credit score, you can still qualify for these business lines of credit. Now, the difference between this bucket right here and this bucket right here is that this doesn't have as much income. So the revenue based types of products you're going to be able to qualify for, usually regardless of your credit score. As long as your credit score is like 600 or above, some go as low as like a 550 or 580. But if you have some revenue generating in this medium income monthly category, then you're going to qualify for the fintech business lines of credit. And then when we move up to the fair credit, it's going to be the same options. Now, just take notice of the difference between this bucket right here and this bucket right here. There's many more options that open up when you're generating revenue and when you have a FICO credit score over a 680. So the difference between this bucket here and this bucket here is the fact that you can now start to qualify for bank term loans, commercial business lines of credit, because you're generating revenue and your credit is over a 680. You also are going to qualify for business credit cards because, your credit score is over that 680 mark. And then what opens up is going to be the SBA loans because you have demonstrated revenue as well as a good credit score. All right. So we've gone over fintech business lines of credit, which are going to be revenue based, and the credit score is going to be less of an impact. Now, the difference between fintech business lines of credit and commercial business lines of credit is that commercial lines of credit are going to be coming from the major banks, mid-sized banks, as well as credit unions. Business lines of credit from those types of depository institutions are going to come with much higher requirements. So not only do you need to demonstrate revenue, not just through your bank statements, but oftentimes through your business tax returns, as well as having excellent credit, usually over a 680, in certain cases, 720, 750. So the fintech business lines of credit are going to be much easier to obtain versus the commercial business lines of credit that you actually receive from a bank. Now, some examples of commercial business lines of credit include Truist business line of credit, Citizens Bank line of credit. I've done several videos on those already. Those are going to be subject to a higher underwriting criteria versus if you were to try to go get a Fundbox or a Cabbage or a Blue Vine on deck. Those are going to be mostly revenue driven and you could have lower credit score. Now, you can't go to Truist or Citizens Bank with a 620, a 650 credit score and get approved. So that's just one of the major distinctions. Now, when we're looking at the subprime credit, but the high revenue, again, you're going to qualify for the fintech credit cards because most of those are revenue based, as well as the fintech business lines of credit, as well as equipment loans. Now, one thing about the business credit cards, why you don't see this over here is because even if you're generating a lot of revenue, most of the business business credit cards are going to be credit score driven. I'm talking about American Express, Chase. Sometimes it may not matter that, you're making over $10,000 a month if your FICO credit score isn't high enough. So in that case, you're going to still be able to qualify for revenue-based types of lending products. So that's why you kind of have to understand where your data points match up. Now, when we're looking at this bucket right here, the higher income, but the fair credit, you're going to actually be accessible to SBA loans in certain cases. With certain cases, the business credit card. For certain lenders, certain institutions, let's say if you have a deposit relationship, having that high revenue can sometimes overcompensate for your lack of credit. So let's say, you have a 650, a 660, but you're bringing in, $25,000, $30,000 a month. In certain institutions where you have a banking relationship, you can still possibly qualify for certain business credit cards. Again, this is just an overgeneralization. This isn't going to apply necessarily everywhere. Now, this bucket right here in the top right corner, this is when most products are going to open up for you when you have over $10,000 in monthly revenue and you have over a 680 FICO score. You're going to qualify for the Fintech cards, the business credit cards, Fintech business lines of credit, as well as the bank loans and SBA loans. So this is really where, the most options are going to be available. So I just wanted to put this together just to kind of show you guys, what types of products that you're going to qualify. So if you're in this bucket right here, this is something I see a lot. Your business has very low revenue and you have a low credit score, you shouldn't be trying to apply for Fintech lines of credit or commercial bank loans or even business credit cards that require a personal guarantee. So you really have to understand where you fit in, and vice versa. Like if you're in this near prime, high income bucket, you don't necessarily have to settle for merchant cash advances because you could probably go get better terms with a commercial business line of credit. So I just wanted to put this together just to give you some sort of idea where you would fit in based off of looking at your credit score as well as your revenue for your business. Now, again, this is an oversimplification, overgeneralization. There's obviously nuances with various different financial institutions, different rules, different considerations, but generally speaking, these are going to be some of the options available based on the business revenue as well as the credit score, personal credit score. Now, if you're a small business owner and you don't know where you fit in, where your data points match up in terms of the different business credit products, I suggest you check out Fast Capital 360. Now, the reason why you should check out Fast Capital 360 is because they make business financing simple. You get multiple lenders with one request, rates as low as 7% and loans up to $500,000. And one of the best parts is that they will curate the different loan offers for you, so you don't have to guess whether or not you qualify for an SBA loan, an MCA, equipment financing, business line of credit. So they have a lot of different credit products for you to choose from, and they take the guesswork out of trying to figure out which ones match up with your data points and which ones fit your business needs. So if anyone is interested in pre-qualifying with just a soft inquiry for different business financing options, check out Fast Capital 360. I've dropped a link in the description of the video. That's all for today's video. Until next time, take it easy and we'll talk to you soon. Peace.